Dave Robbins, you're responsible for emerging market strategies at TCW. Considering all that's going on in the emerging markets right now, whether it be in Argentina with the devaluing of the peso or the Chinese slowdown, why should someone stick around?
Listen, emerging markets is a very diverse asset class. We have some asset classes in emerging markets like local currency, which we think are going to continue to be volatile. But the investment grade portion of the EM asset class we think is very attractive relative to US fixed income investment grade.
So if it is a buying opportunity, TCW recently launched a suite of bond ETFs, emerging market bond ETFs they can buy. Maybe the timing was good. They're duration defined, very different from normally what you see in the marketplace. Tell me about them.
Well, these are the first duration defined ETFs in the market. And what we think is that where we think the value is in the market is in the investment grade space. So we created 3 investment grade ETFs where investors can essentially customize their duration exposure. We have a 1 to 3 year ETF, a 5 to 7 year ETF, and an 8 to 12 year ETF. And each of these ETFs are US dollar investment grade EM sovereigns and corporates.
And is it mostly the BRICS? Is there some other frontier markets involved as well? What are the countries involved?
Well, the biggest countries involved are the investment grade countries. So Brazil, Mexico, Russia are your largest investment grade issuers in emerging markets. And those are the top 3 issuers within each of the indices.
And then what kind of yields can people expect from the 3 different ETFs?
Well, the yields you get on the ETFs are significantly higher than the ETFs for US fixed income. You get a 50 basis point premium over US fixed income in the very short ETF. In the middle and longer term ETFs, you're getting spreads of anywhere from 100 to 200 basis points over US investment grade credit, and obviously significantly higher than US treasuries.
And then finally, what kind of a role should these ETFs play in an individual investor's portfolio?
Well, duration matters in a rising interest rate environment. And we think the short-term ETF really provides attractive yields and a lot of safety, quite frankly. You've got investment grade securities in emerging markets. We haven't had a default, or in the last 10 years, the default rate on emerging market investment grade is 0. In fact, it's even better than US investment grade.
All right, safety and an emerging market bond ETF. Sounds good to me. Thanks a lot, Dave Robbins.
Thank you.
Thank you for watching The Street.